The Dow Jones Industrial Average fell 0.3%, while the Nasdaq Composite edged up 0.0043%, while the S&P 500 hovered near the flatline down 0.07%. The trading action follows a preliminary US-UK trade agreement, but new tariff rhetoric has kept markets jittery. US President Donald Trump floated an 80% tariff on China via Truth Social, a step down from the current 145% but still above the sub-60% expectations reported earlier in the week. Progress this week was encouraging, but we remain in the ebbs and flows of the news cycle, said Nationwide's Mark Hackett. We are likely in a sideways period of volatility until we begin to get tangible outcomes. Bitcoin's surge. Meanwhile, Bitcoin BTC 0.54%. Bitcoin surged above $104,000 Friday morning, driven by strong institutional inflows and ETF performance. Spot Bitcoin ETFs reached a new lifetime high and cumulative flows at $40.33 billion, per Bloomberg data. The largest cryptocurrency by market cap gave up some of its gains, trading at around $103,000 following Wall Street's closing bell. Elsewhere, Wells Fargo noted only 13 companies have withdrawn earnings guidance this season, fewer than expected in what it calls a positive surprise. Stocks such as Ford, Delta, and Snap were among those pulling forecasts. Cathy Yoon commended Commissioner Pierce's remarks on crypto regulation but expressed concerns over her idea of a regulatory sandbox. The Securities and Exchange Commission has radically shifted its policy on crypto, bringing voices such as that of Commissioner Hester M. Pierce to the forefront. However, some still believe that her pro-crypto approach has important limitations. Cathy Yoon, general counsel at Wormhole Foundation, recently commented on the remarks made by Commissioner Pierce. While she agreed to some extent that regulatory exemptions for crypto are needed, she criticized Pierce's idea of a regulatory sandbox. Notably, the debate centers around tokenized securities, which fall under the SEC's jurisdiction. Any type of security must meet stringent regulatory requirements before the SEC deems it compliant. However, there are significant challenges ahead. Sandboxes are great in theory, but there are risks. Yoon Pierce points to ongoing technical issues as a key obstacle. In particular, the technical infrastructure remains underdeveloped. Yoon acknowledged this as a compelling argument in favor of regulatory exemptions for tokenized securities projects. The infrastructure needed to support tokenized securities is still rather undeveloped and expensive to implement. Yoon, Wormhole. Still, Yoon noted that she disagrees with Pierce's concept of a regulatory sandbox. The concept, which Pierce has long advocated, refers to allowing startups to test certain products that exist in a regulatory gray area. These firms are closely monitored by regulators but face fewer penalties and a reduced compliance burden. Yoon argues that sandboxes sound promising in theory but introduce risks such as arbitrary enforcement and favoritism. A sandbox is only as good as the leeway and support a regulator offers to the sandbox participants. There is also a concern that regulators may favor sandbox participants, leading to biased oversight or even weakened enforcement in the long term. Yoon, Wormhole. Instead of a regulatory sandbox, Yoon proposed a limited duration regulatory exemption. This would allow companies to test their products in a real environment, helping them adapt to actual conditions and scale more effectively.